Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Quanly Good Evening. Today is Tuesday, March 10th. I'm analyst Jang Jita. Remember to like, subscribe, and share during class. If you have any investment questions, feel free to leave a comment. If I don't get a chance to answer today, I'll make sure to follow up with everyone in tomorrow's class. Of course, as usual, today I'll also be answering a question from a student that came up yesterday. Good evening, everyone. In a moment, we'll take a look at today's investment highlights. Just now, as I mentioned at the beginning, when Meidaidzi asked whether Trump is really going to call a ceasefire, this ceasefire news has been all over the place. Sometimes saying there's a ceasefire, sometimes saying the fighting continues, back and forth. How should we really look at this? That's one of the key points I'll be analyzing for everyone in tonight's Quenyin Good Evening. Let's take a look. Good evening, Meidaidzi. Hello, Hui Zhanzhan, and hello, Yakshang Xiaoshang. Also, Fei Deyu, Yulunga, and Blank. Good evening to you all. S1N, is that your name? Good evening, 6P, and also XF. Hello, hello, hello. Okay, now that everyone is settled in, let's get into today's investment highlights. Of course, I want to remind all of you that since the US has entered daylight saving time, trading now starts earlier at 9:30. So there's a lot of trading activity at 9:30. Because of this, our Good Evening program will also start an hour earlier, and we'll be connecting with everyone at 8 p.m. to have this discussion. Confirming our schedule. 8 p.m. during daylight saving, and 9 p.m. for standard time. Starting this week, we're live at 8 p.m. Good evening, everyone. Now for investment coaching. Trump's impact and oil price risks. Trump's taco moves are frequent. We've seen that Trump often blusters without following through. He starts strong, but often softens his stance under real-world pressure. So in this recent conflict between the US and Iran, from the start of the fighting until now, it's been about 10 days since February 28th. After these 10 days, today we can see that Trump has expressed some different views on the issues surrounding the war. He even thinks that the war is already over. But is it really over, or is it just for show? Today, we definitely need to analyze this thoroughly for everyone. How concerned should we be about oil prices? Spikes drive up inflation and costs, pressuring the Fed to delay or cancel rate cuts. When oil surges, the impact on the economy and GDP is broad. At what price level should we worry? We must stay alert. So if oil prices are below a certain level, we can basically take a neutral view. Today, we also need to pay attention to oil prices. As for the industry side, Bank of America Securities and Jensen Huang, the CEO of NVIDIA, specifically mentioned that during this Middle East crisis, they both agreed and were optimistic about a particular industry. They believe that this industry hasn't been affected by the war. Which industry is it? If you happen to own stocks in this sector, you might want to keep an eye on them. Of course, there are both winners and losers. Some are happy while others are worried. During the impact of the war, aside from the airline and tourism industries taking the first hit, aircraft manufacturer Boeing is also under considerable pressure. But whether this pressure will be short-term or if there are other factors at play is something we need to watch closely and pay special attention to. So in tonight's focus segment, we'll be breaking down all the related topics for everyone. Alright, someone asked if it's a good time to buy KTOs right now, Kratos Defense and Security Solutions. I might only be able to answer that tomorrow since I haven't been specifically tracking that stock. Just now, I wanted to respond to HAH. You actually asked about this yesterday. Which stocks can be used for hedging and making profits under the current geopolitical risks? Let me answer that first, since I was originally going to talk about it when discussing oil prices, but I'll just briefly mention it here. When international geopolitical risks rise, it's obviously more favorable for companies related to crude oil and energy. I'm talking about the short term here. Energy companies, like oil companies, tend to benefit because oil prices surge. Then there are also some defense-related stocks, since heightened geopolitical risks bring up themes like weapons manufacturing. For example, companies like Lockheed Martin, Raytheon Technologies, and so on. Defense stocks are short-term market focal points. Short-term means watching US-Iran developments. If the conflict eases, these stocks will drop. They often open high, then drop. If tensions rise, defense and energy stocks benefit most. Conversely, airlines and tourism are negatively affected. For Taiwan, petrochemicals usually gain during war, but as conflict cools, stocks like the Formosa Group can hit their lower limit after hitting their upper limit just yesterday. This volatility is common. There are also some companies that are more defensive, what we call defensive stocks. For example, in Taiwan, you have the three major telecom companies, some telecom stocks like Changhua Telecom, Fair EasTone, and Taiwan Mobile. These kinds of companies are considered safer bets. Of course, in the US, there are also many telecom and infrastructure stocks like these. Defense and energy are also safe havens where you can profit, suitable for short-term themes. That answers HAO's question. I'll update on KTO's tomorrow. Regarding economic data, there's a minor release at 6 p.m. tonight. Let's check it anyway. February's NFIB Small Business Optimism Index was 99.3. With a 99.5 preview, it's expected to dip to 98.8 due to ongoing conflicts. Regarding U.S. wholesale sales, the numbers will be released at 10 p.m., with the previous figure at 3.91 million and the forecast showing a slight decrease to 3.89 million units. Of course, existing home sales are also affected by interest rates. Higher or lower rates will impact the sales situation. The higher the mortgage interest rates, the more cautious consumers or buyers tend to be. Oh, good evening, William. Today, oil and gas stocks really took a nosedive. Yeah, that's because Trump said the war is over. He thinks it's already ended. All right, I'll update everyone later on whether it's really over or not. Hey, Ningming9279375, good night. It seems like it's been a while since I've seen you online, right? Okay, let's also take a look at what the officials have been saying. As for the actual price of oil, everyone needs to pause and pay attention. You have to be alert to the price of oil. If it hasn't reached a certain number, then I'll just observe it objectively. Recently, it just so happens that we've hit that price, roughly around $100 per barrel. Why do I say that? What about Goldman Sachs? Amid geopolitical risks, their recent report says if oil hits $80, global inflation rises 0.2%, while GDP drops 0.1%. Sounds minor, right? Inflation up 0.2, GDP down 0.1. Not too bad for an $80 oil scenario. Take today's oil prices, fluctuating between $80 and $90, around 86. Short term, this could raise global inflation by 0.2%, while GDP drops 0.1. That's not much, honestly. But it would show a rapid increase. If today oil prices jump from $80 to $100, let's just put it simply, whether it's WTI or Brent, it's the same. Once it goes above $100, global inflation would rise by about 0.7%. Now, that 0.7% is no small number. That's really significant. And as for GDP, it would drop by 0.4% in the opposite direction. So you need to keep this in mind. If oil goes above $100, the pressure on inflation will definitely increase. Higher inflation and rising prices will affect what? They'll impact consumer spending, affect companies' willingness to invest, and even influence things like import and export trade volumes. There's a whole chain reaction. So all these are key components to consider. In GDP, we talk about C plus I plus G plus X minus M. C stands for consumer spending, I is for business investment. So all these things, these components like C and I, when inflation spikes, all of these items will be affected. They're negatively impacted. So when inflation rises, GDP likely declines. When prices exceed $100, remember that for every 1% rise in inflation, annual GDP drops by 0.4%. If it hits 120, like it almost did recently, or if the US and Iran clash due to Trump's impulsiveness, if one day it really shoots up to 150 or even higher, then the impact on crude oil and inflation, and of course the shock to GDP, will be extremely significant. Why do I say this? Well, the Nobel Prize-winning economist, a Frenchman named Aguillon, explained this. Although I haven't studied him in depth, his name is quite unique, Aguillon. He said that if the price of crude oil surges above $150, the global economy could see a repeat of the 1973 oil crisis, which would lead to a significant bout of stagflation. Stagflation means inflation keeps rising while the economy keeps declining. In other words, as I mentioned earlier, inflation goes up and GDP goes down. That's stagflation. As for now, he believes it's not likely to reach the level of the 2008 global subprime mortgage crisis or financial crisis. He doesn't think a global economic collapse is on the horizon. Not yet, at least. But if oil prices shoot up above $150, then stagflation could very well happen. So in other words, just remember that the current level of crude oil prices is above $100. If oil stays above $100 too long, it hurts inflation and GDP, increasing the economic burden. But if things warm up under Trump, oil prices won't stay that high. They'll immediately drop back below 100. So what happens then? Inflation impact will be minor and GDP damage much lower. Just remember this $100 benchmark. That's all you need. Don't worry about media predictions of soaring oil prices or US-Iran tensions. Just watch the crude oil price. All you need to watch is whether the price is consistently above or below $100 during these ups and downs. That's enough. Now, as for the U.S. unemployment rate, it's at 4.1%, and the terminal interest rate, it's holding at 3.2%. Honestly, these numbers aren't a big deal. They don't have much impact. The fluctuations up and down aren't really because of this. With crude oil prices spiking, people are thinking, well, the Fed probably won't cut rates, right? So if they don't cut rates, does that mean the 10-year Treasury yield will shoot up to 4.5 or even above 5? But that hasn't happened either. So we think that the current US-Iran conflict and the geopolitical risks are more of a short-term situation. Now, will this short-term situation last just 10 days? It's only been 10 days so far. Will it last half a month, or even 3 months or half a year? Like we mentioned yesterday, Trump said he might. He said in this Iranian war, they could prolong it, perhaps 100 days or until September. Will it really last that long? We don't know. However, in the short term, initial results within a month would mean a minor impact. Yeah, so however the index drops, that's how it'll come back up later. That's just how it is with non-economic factors. In the past, whenever there were non-economic events like 9/11 or, wars like the Iraq-Iran war, the Afghanistan war, whatever it was, even things like COVID-19, the index would drop, but in the end, it would always surge back up. As long as the impact of these non-economic factors on the market is relatively short-term, the index will fall because of them, but it'll rebound in the same way. When it drops, it drops. But the 2008 crisis was different, caused by financial factors, so it took longer to recover. Remember, if this ends in a month, it's not too bad. But if it drags on for 6 months, or if there's still a war before the midterm elections, that hurts Trump's polls and the GDP. Right now, we just need to watch things closely. How long will the fighting last? Short-term skirmishes won't have much impact, but a long-term Cold War would be bad. As for the terminal rate cuts are holding steady at about 1.7 times. Hi, Amber. Good evening. The U.S. dollar index fell 0.58%. Rising safe haven demand also boosts the dollar, reflecting its safe haven appeal. It has slightly climbed back above the 200-day moving average. So, of course, as the conflict between the U.S. and Iran gradually eases, the U.S. dollar might weaken a bit again. Basically, it just keeps going up and down like this. So what's the main point here? I think lately we've been focusing our discussions around geopolitical risks. It's enough to just keep tracking the latest updates, because as long as these geopolitical risks are resolved and the dust settles, everything else will just fluctuate between highs and lows, but in the end, everything will return to its original track. Remember what I'm telling you. As long as you understand geopolitical risks, keep tracking them, and closely monitor any changes, then eventually the indexes and stocks will all go back to their normal trajectories and continue as usual. Just remember this, that's enough. As for all the back and forth in between, it's kind of like, do you know there used to be a very famous investor named Castellani? Was Castellani Russian or German? I think he was German. Yes, German, Castellani. He once talked about the theory of the dog and its owner. No matter how the economy or stock prices move, the stock price is like the dog. Sometimes the dog walks ahead of its owner, sometimes behind, bouncing back and forth. If you've ever had a dog, you'll know what I mean. Everyone knows this, because dogs are just uncontrollable. Sometimes when you take them to the park or out for a run, they just take off and go wild because they're so happy. So sometimes they run far away from their owner, sometimes they stay close, just going back and forth. The owner represents the current economy. Oh, so the fundamentals of our country's economy, whether they're heading up or down, that overall trend is set. The economy's main direction is like the owner's path, while the ups and downs of the stock market are like the dog running back and forth. But no matter how the dog runs around, it will always end up returning to its owner. There's a positive correlation there, so that's something you need to remember. Whether it's geopolitical risks or other non-economic factors, they're like things that affect how the dog runs before or after it takes off. But in the end, we have to look at the economy itself. If the economy is stable, if it's on an upward trend, and with the development of AI, if industries in various countries are still thriving and there's a chance for revenue and profits to keep growing, then the ups and downs of the stock market will ultimately return to a positive track. Okay, so keep this in mind. Now, regarding geopolitical risks, let me give you an update. Iran. So what's being said? The current conflict has now reached its 10th day. Cash cow and golden bull? Well, cash means money, right? Cash cow. Good evening, Michelin. Good evening. Speaking of, talking about Germany and Russia, it just makes me think. Honestly, I'm kind of envious. Yesterday, someone left a message on our shaman message board saying that they'll be coming to class this Thursday, but after Friday, they're heading abroad. That person is called Ludan. Also, good evening to Joplin. So Ludan left a message saying he's going to Paris and then traveling to Iceland. If you're visiting both, you'll probably be gone for at least 10 days to half a month. No way around it. Oh, and good evening to Amy. What do you do for fun in Paris? There's the Arc de Triomphe and all sorts of things in France. Everything is just beautiful with the castles and gorgeous places. Plus, there's the Champs-Élysées, where you can buy luxury brands. LV is really cheap there, right? If you're going to Iceland, you're likely going for the Northern Lights, right? They're visible in Iceland and Norway. I'm so envious. Travel as much as possible while you can. I'd love to plan trips if I had more leave, but because my live stream schedule is unusual. I alternate weekly between streaming and day shifts, sometimes giving talks at branch offices. With my schedule constantly switching like that, taking a long vacation for 2 weeks or a month is honestly pretty unlikely. Good evening, SHULN Day. Good evening, 092. Speaking of going out to have fun, so today, before I came on to do this live stream class, I was watching the news and I wanted to share something with everyone because honestly, that news made me feel a bit emotional. There's this company called Shangfan Technology and they have a dating website called Love Apartment. Love Apartment used to be really famous. If you don't know about Love Apartment, maybe younger people these days aren't as familiar, but people from my generation probably know about this dating website called Love Apartment. Now, if you watch TV, you might be more familiar with Diane Shangi, the one that sells fish oil. They have Chen Meifeng as their spokesperson, and you always hear those commercials, right? The ones that say, how much EPA is in your fish oil, or how much EPA do you get from taking it? So Diane Shangi, the fish oil company, and Love Apartment actually have the same founder. Do you know how old the founder is? He was 47 years old when he passed away. He was the very young founder of 2 publicly listed companies, only 47 years old, not much older than me, and he passed away at 47. Both Fantech and Diane were really famous, but he's gone now. Maybe it was from overwork, or he was just too exhausted, or something else. We don't really know. According to the news, he passed away in his sleep while on a business trip. They didn't mention any specific cause, just that it might have been some health issue or maybe just from being overworked. Anyway, I don't think it's anything to take lightly. He was only 47, incredibly young. Oh, don't be envious. You can always take a ferry in Paris, too. Speaking of taking a ferry in Paris, talking about travel always leaves more to say. Good evening and good night, Hector. Let's say good night with the little donkey. In Paris, I visit a few shops you should try. There's Fuzhou Liangsheng Hao, the twins shop, where the line is always super long. I forgot the twins place's name, but it's tasty. Nearby is Shijia Peacock Pavilion. Stir fry there is about 200 yuan, and quite good. It's famous in Paris for serving things like abalone. It's delicious stir-fried with 3-cup sauce or garlic. In Paris, I always grab the Peacock Pavilion dish and visit the twins' place. Try these Taiwanese dishes if you're at Danshui Bay in Paris. It seems like cardiovascular disease is okay, but I'm not sure. Maybe because he's still young, just 47 years old. Yawning, good night. Yawning, good night. As for this Iranian fighter, wait, I'm getting off track again. Back to the Iranian fighter. If I keep talking, it'll take another hour before class ends. Alright, so about Iran. This fighter has entered the 10th day, and he's warning that if the conflict continues, oil prices could break $200 and might stay in the triple digits for a long time. What he's saying is basically aimed at Trump, because this hits Trump right where it hurts. He doesn't want oil prices to spike, and he doesn't want inflation to get out of control. He said that right now, even Kuwait is cutting production, and Iraq's output has dropped by 70%. He said if the US and Israel can handle triple-digit oil prices, then go ahead and keep fighting. Anyway, only if he's absolutely sure, only if he's sure that Iran won't be attacked again, will he even consider announcing a ceasefire. He needs to be certain there won't be any more attacks before a ceasefire can really happen. So while Trump is saying there should be a ceasefire now, from Iran's perspective, they don't see it that way, because they still think there's a real chance they could be attacked. Alright, another thing to mention is the Revolutionary Guard. The Iranian Revolutionary Guard has already sworn allegiance. Now you should remember this name, Mojtaba. He's the son of Khamenei, the former supreme leader. His full name is Mojtaba Khamenei. That includes support from the president and the speaker of Iran's parliament. Even Russian President Putin, as well as groups in Lebanon like Hezbollah and the Houthi forces in Yemen, have all sent messages of congratulations, congratulating Mojtaba on being chosen as the new supreme leader. In other words, even if Trump is unwilling, all of Iran's internal and external allies are fully supporting Mojtaba. So does this mean their political situation is really that unstable? Right now, it doesn't seem that way. It's not like the opposition is rising up to protest and the people are about to overthrow the regime. It doesn't look that easy. It's not that easy, because at this point, the Revolutionary Guard and everyone else have pledged their loyalty, and both the president and the Speaker of Parliament are in support. These external allies are also in support, so can Trump actually replace him? I think that's still up in the air. Good night, Caesar. And good evening to you too, Melissa. Good evening. I misheard you about Paris. There's no Conquet Pavilion there. That's in Tom's Way, Taipei, at a place formerly called Paris. Their food is great. Try it sometime. Now, the son follows the father with general support. Oil prices are stuck, but here's the key point about Trump. Trump's something else. Yesterday, he vowed to keep fighting through September. This toughness pushed oil to $119. Causing U.S. and international stocks to tumble. Here is what happened next. Yesterday, after he said the war was nearly over, stocks rallied and oil dropped below $80. Given this volatility, how should we view the market? Remember, when non-economic factors cause a dip, prices eventually recover. So when you encounter panic in the market, remember not to blindly dump your stocks. When there's panic, don't just sell off everything. At most, you can trim your positions a little, lower your exposure, and reduce your risk. Also, don't use leverage to trade. If you stick to these principles, you'll have a better chance of getting through these turbulent times. As for Trump, today he suddenly said the war is basically over. Anyway, it's all up to him. If he says it's over, then it's over. If he says it's not, then it's not. It's just back and forth like that. Back and forth. He says war progress is ahead of schedule. Iran lacks a navy or air force. They're beaten and confused. They lack communications now. He may even control the Strait of Hormuz. Oh, and finally, he mentioned something about sending ground troops to Iran. As for seizing oil or taking over Iran's nuclear facilities, that's still a long way off. But he does have plans, very detailed plans. They even talked about plans to curb the current high oil prices. Alright, so if this new leader, Mojtaba, can't meet America's demands, then Trump, when he supports it, will have him removed or even killed. And then there's talk about easing sanctions on Russian crude oil and the US Navy escorting oil tankers through the strait. I think this kind of thing is just something to take note of and move on. Why do I say that? His claims that the war is over or they're ahead are just him saving face. He knows if fighting continues, Iran doesn't care about him, and the US and Israel can't do much about Iran for now either. Despite their crippled navy and air force, grounded planes, and dead missiles, Iran is still acting tough. They haven't surrendered and are holding strong. Meanwhile, crude oil hit $120 a barrel. That's unbearable for now. It's not just the US. Prices and global allies can't handle it either. Look at Europe's natural gas. Japan and the G7 are considering releasing 300 to 400 million barrels of oil to lower prices. So if this fighting continues, the whole world is struggling, so Iran is hiking prices for a premium. Ongoing conflict will keep oil in the triple digits. It's a test of endurance. Trump is straightforward. He suggested easing sanctions on Russian oil. It's ridiculous. After sanctioning Russia over Ukraine, they're now easing those same sanctions due to oil prices? Plus, the US Navy will escort tankers through the strait. But really, does any oil tanker dare go through the Strait of Hormuz now? The narrowest part is just 33 miles. That's tiny, making targets easy to hit. In the past, the US Navy provided escorts, but even then, will insurers even cover these tankers so they can pass? I think everyone is still waiting. A news report earlier said, so why are these insurance companies still hesitant to insure these oil tankers? It's not because the US hasn't provided some $20 billion insurance guarantee, and it's not because the US Navy isn't offering escorts. The real reason is that these insurance companies just don't dare to take the risk. The main issue is the fear of accidental conflict. If a tanker in the Strait of Hormuz is hit by a missile, ship, or cargo damage is manageable. Their real fear is a missile causing an oil spill. If a leak leads to environmental devastation and ocean pollution, the resulting cleanup costs and compensation are their true concerns. The compensation would be astronomical, especially in Gulf countries like Dubai or Saudi Arabia. They rely heavily on tourism. Their luxury coastal resorts cater to tourists. If a tanker gets hit now, all that crude oil spills out and washes up, you can just imagine. Just picture the coastline of Dubai. How would they handle a sudden oil spill? Neither of us has the means or the know-how. Arab countries lack experience with this. Unlike Western nations, the pollution would spread everywhere. How could you enjoy Dubai's sunny beaches if they're all polluted? Enjoying it is impossible. Once you hit the water, you're covered in oil. That's a disaster. Dubai's tourism would suffer, and cleanup costs would drain insurance companies. Exactly. Some insurers won't cover these cruise ships because if a missile hits and causes an oil spill, the cleanup is massive. That's the issue. Just to clarify, as for Trump saying the war is over, well, in my opinion, let's wait and see. You say the fighting's over, but what if he changes his mind tonight and says, I never said that. I'm going to strike Iran's new leader. Isn't that possible? If so, won't global markets take another big dive? Wouldn't that mean people keep getting whipsawed between long and short positions? Until everything is settled, just wait. Just wait. Wait until oil prices have really stabilized, until the market has gradually calmed down in response to all this news, and until there's actually a glimmer of hope for negotiations between Trump and Iran. I think that's when it'll be a safer time to get in and buy. Chasing rebounds, jumping in and out. What if tomorrow drops? Or if it's like Taiwan's market today, surging 1,000 points but closing up only 400? It's exhausting. It dropped 1,500 points 2 days ago. Today, the market went up 1,000 points, but then it dropped again at the close. It's just too exhausting. Seriously, it's really tough. You might as well take a page from our friend Ludin. If you have time, just go travel to Paris or, I don't know, Iceland or somewhere. And if you don't have enough funds, that's okay too. If you're short on cash, hey, good night Ludin, and good night Silu. If you don't have enough money, just do what I do. Go to Bali and Tomsui and have a meal at Conquay, or grab some Fuzo-style twin pastries. That's a solid approach. Just don't rush in for rebounds. Buying today to sell tomorrow is exhausting. Give yourself a break and wait for the dust to settle before buying slowly. Good opportunities will come in time, and that's when you'll profit from the big swings. Forget day trading and constant selling. It's just too exhausting. Next question. Regarding leveraged semiconductor ETFs, can you keep holding them? I'll cover that tomorrow. Today, I'll briefly mention Micron. As for SanDisk and Micron, basically they're both semiconductor companies, both related to DRAM and memory. One focuses on DRAM, and Micron is a key player in HBM. I'll talk a bit about Micron's memory business in a moment. For now, in the short term, there aren't any major issues. After a big run-up, there's just been a pullback. As for Nvidia, in the short term, it's been consolidating and moving sideways within a range, but it hasn't broken down, so it's still pretty stable. The current range-bound trading strategy hasn't changed. So that covers your questions about Micron, SanDisk, and Nvidia in a nutshell. Of course, in a bit, I'll add some updates about Micron's candlestick chart and some fundamentals. There's some news to share. By the way, good evening to the staff, and of course, good evening to everyone. We need to turn Iran into I belong for cleaning, okay? Now, as for the salted duck egg trip, it might take about 20 days, right? I've never been to Paris, actually. Never been to Paris. I can only go to Bali. Trump's unilateral de-escalation pressured oil prices, forcing a partial pullback. Consequently, crude fell 8.42%, continuing the recent market volatility. As long as crude oil prices go up, the stock market goes down. As long as crude oil prices go down, the stock market goes up. The most important thing is that the rise and fall of crude oil prices depend on whether the US-Iran conflict is at a stalemate, if there's hope for resolution, or if it's going to drag on for a long time. So everyone just needs to pay attention to what Trump says and what Iran says. That's enough. He's right. The market just climbs mindlessly. Every stock goes up. But if he misspeaks, then tomorrow, even the big tech stocks will nosedive. That's the logic. So responding is simple. If you're interested, if you want to trade short term, wait for a major market dip. For instance, if the Taiwan market drops 1,000 points, buy small amounts of 0050, TSMC, MediaTek, or Fubon Financial. Just buy a little of each. And if the market keeps dropping, just buy a little more on the dip. If the US stock market takes a big hit, what should you buy? Just take a look, see if there's TSMC's ADR, Nvidia, Micron, or any of those companies. If they're trading at a lower range and haven't broken through key support levels like Google and so on, then just buy a little bit of each. That's the strategy. If you're aggressive, only buy during big drops. Otherwise, wait. If the market suddenly surges on news and jumps in a day, don't chase it. Never chase. Trump just said he doesn't want to fight, but he's unpredictable. He might say that today and change his mind by tonight. Since he's so hard to read, don't just react when he says it's over, even if US stocks, Nvidia, or Micron shoot up. Then you go chasing after them, but if you chase and then today he says the market's going up, isn't that just never ending? So my suggestion to everyone is that with the current stock market, you should wait for a big drop before you buy the dip. And what should you buy? Buy good companies. Those that haven't broken through strong support levels, companies that haven't fallen below key points, and whose fundamentals are still solid. I think AI companies fit that bill. It's still an industry worth considering for your portfolio at this stage. Okay, now moving on to Bank of America. Speaking of Bank of America, let me also add something about Micron. As for Bank of America, the stock price has been dropping as if it's being weighed down by money or blown down by the wind. That description is actually pretty accurate. The drop has been really fast, so it might as well just keep falling. The global research team at Bank of America said that the storage industry is currently in a super cycle. They also mentioned that the conflict in the Middle East actually has an impact on these companies. As for the first round of HBM, especially HBM chips related to AI storage, the impact on the chip supply chain has been almost negligible. Overall, the supply chain for this chip industry, particularly for storage, is characterized by a high degree of intra-Asia circulation. Intra-Asia circulation means Asian countries are self-sufficient. They produce and trade internally, handling the entire industry chain themselves. They aren't really affected by events in the Middle East. Even with conflict in the Middle East or Africa, the Asian circle remains stable. Within Asia, supply and demand are well managed and abundant, sometimes even in excess. Samsung, SK Hynix, Micron, and some Taiwanese firms form a tight circle. For the most part, demand far outstrips supply. Even if there's some competition going on, honestly, it doesn't really have much of an impact. That's basically what he means. Now, he's saying that aside from high-frequency memory like HBM, the demand for things like Netflix in the first wave is still really strong, and it's way beyond current production capacity. In fact, Jensen Huang, the CEO of NVIDIA, mentioned at the recent Morgan Stanley Technology Conference that He specifically called out to the first wave manufacturers, saying, basically, you manufacturers should go ahead and build as many factories as you can. No matter how much extra capacity you produce, I'll take it all. Everything will be fully booked. So looking ahead for these high-end AI chips, I think in the development of AI, especially with high-end AI chips, the demand will be huge. For example, AMD's MI400 and MI450 series. For example, right now the GB200 and GB300 are selling like hotcakes, and in the future there might be the Rubin series, the Vera Rubin series, and maybe even the Feynman series with the FF prefix coming out the year after next. All these chips are going to play an irreplaceable role in the development of AI. They're all going to be crucial for the future of AI. AMD and NVIDIA, especially NVIDIA. Also memory like HBM, HBM3, HBM4, these kinds of high-frequency memory chips. Samsung and SK Hynix from Korea and Micron from the US are all major representatives in this field. These companies pretty much have a monopoly. HBM3 is the current mainstream, and in the future, it will develop into HBM4. HBM3, if I remember correctly, has about 12 layers stacked. HBM4 has 16 layers, so advanced tech means better performance. All three major companies now focus on HBM, which is impressive. Smaller firms like Nanya or Winbond can't compete anymore. They're in different leagues. One focuses on high-end products, while the others don't. For mainstream DDR4 and DDR5, Winbond and Nanya still produce those. But for high-end AI products, HBM3 and HBM4 are in huge demand from the three companies I mentioned. Also, watch future power demand. Whether it's nuclear, solar, transformers, or energy storage, these are all key areas. This is also very important because all AI development requires high voltage, high-end power supply and storage technologies, so you need to keep these things in mind. Advanced AI chips, HBM, and power will be the main pillars of future AI development. Of course, Bank of America and Jensen Huang have both said that memory companies haven't been affected, and you can actually see why. Whether it's Micron's prices or companies like SanDisk or Western Digital, WDC, they're all in the same situation. Stocks are just correcting after a big run-up. For companies like Micron, the 50-day moving average holds. Yesterday, a bullish candle pushed it back up. As long as that average isn't broken, don't worry. Some of these are just technical corrections after a big rally. Every time it touches the 50-day moving average, the price goes up. Last November and December, whenever it hit the 50-day moving average, it bounced back up. This time, it touched the 50-day moving average again and rebounded a bit. So as long as it can hold above the 50-day moving average, I think for memory companies like this, there really isn't a big problem. It's just that during these short-term corrections, you have to be able to handle it. And remember, if you go all in, like just now, Caesar said he always buys the 3 times leveraged semiconductor long ETF. When you use that much leverage, the risk is definitely higher. If there's any sudden movement and the market pulls back 10% or 15%, with 3 times leverage, your losses could be 50%, 60%, or even 100%. The drop can be extremely steep, so you really need to be careful. It's better to use regular stocks to trade and deal with these recent market conditions, especially with all the unpredictable geopolitical risks and volatility. All right, moving on to Boeing. Boeing is also affected. When we talk about airline stocks, they're often the first to take a hit, right? As for Boeing, recently, quite a few airlines have started to put their orders on hold. According to the investment firm Jefferies, about 14% of Boeing's orders come from the Middle East, specifically for the 777X wide-body aircraft, and about half of those orders are from that region. As for the 787 Dreamliner, about a third of its orders also come from the Middle East. So what should Boeing do? Will this news cause Boeing to never recover? I actually do not think it is that serious, because it is mainly affected by geopolitical risks. If you take away the geopolitical risk factor, you will see that since the middle of last year, Boeing has actually received a lot of orders from various countries, Vietnam Airlines, Turkish Airlines, and even European carriers. And the 3 major Middle Eastern airlines have all placed significant orders for passenger jets with Boeing. So regarding the negative impact of geopolitical risks, I think in the short term, the biggest hit will be to the airline and tourism industries. As for aircraft manufacturing, there will also be a short-term impact, but whether it turns into a long-term issue depends on one thing: whether the conflict between the US and Iran shifts from a short-term skirmish to a prolonged scorched earth war. If it turns into a prolonged conflict, of course, the impact on airlines and the tourism sector will be significant. At that point, companies like Boeing and Airbus, which manufacture airplanes, would also face a much longer period of disruption. But if the negative scenario we mentioned earlier doesn't actually happen, then any short-term volatility in Boeing stock can just be seen as a fundamental correction, nothing more. In that case, you can treat the 200-day moving average as a short-term support level. If there's a chance for it to climb back above this blue neckline, that would be more favorable for its stock performance. As for where exactly this blue neckline or the 200-day moving average is priced, you can actually see it clearly on the screen. Just zoom in a bit and you'll find it. Sometimes, due to regulatory reasons, we can't state it outright. We can't clearly tell everyone exactly how much to add to the target or what price the resistance is at, but basically you can see it on the screen. We're just following the regulations. So if anyone has questions about the price, sometimes students will ask me after class, "Teacher, what's the target price? Will it go up tomorrow? Will it go down tomorrow? What's the price? And where are the support and resistance levels?" Sometimes it's not convenient for us to answer because of certain regulations, but actually you can see everything on the screen. Asian countries are short on natural gas, right? For example, Japan is one of the countries hit the hardest. Then there's a question from John. He asks, can the teacher analyze TSMC's current situation? As for TSMC, I think fundamentally there's not much of a problem. TSMC doesn't really have any major issues. Simply put, TSMC is Taiwan's guardian mountain with a 45% weighting, so any movement in TSMC affects the whole market. If you really don't know what to buy, just buy TSMC. If you're unsure, just buy 0050, because if TSMC goes down, I'm telling you, Taiwan's stock market will go down with it. So will Taiwan's stock market collapse? If Taiwan's stock market experiences a major crash, that would mean the US stock market has also crashed significantly. If the US stock market, which has been on a long-term bull run, suddenly crashes and turns into a long-term bear market, then I'm telling you, stock markets all over the world will collapse. If that happens, it doesn't matter what you buy, everything will fall. But if we look at it from a long-term perspective, let's say every company, every stock market, every country is going down. In the end, what you need to choose is that one. Go for the one with the widest moat, the most essential to its industry. AI leaders like NVIDIA, AMD, or Broadcom are worth considering, and especially TSMC. If there's a big crash and you're wondering what to buy, just look for TSMC at a good price. TSMC has no major fundamental issues. Bloomberg estimates its 2026 EPS at 90 to 100 NT dollars, rising to 120 next year. I showed you the math yesterday, right? If the EPS is 90, or if it's 100 or even 120, then at a price to earnings ratio of 15, 20, or 25 times, what would the target price be? A PE ratio of 15 would mean the stock is oversold. So what does that mean? If it's undervalued, you look for a buying opportunity. At a PE ratio of 20, that's reasonable, and at 25 times, it's considered very high, meaning it's overvalued, so there's no need to chase it. And 30 times would be even higher. So under this premise, it's very simple. Whether the PE ratio is 15, 20, or even above 25, just do a quick calculation with the EPS, and you'll know at what price TSMC is worth buying. It's really easy, but we can't tell everyone directly. You have to know how to calculate it yourself. I taught you all yesterday. Once you do the math, you'll know exactly at what price TSMC drops to, and you can just close your eyes and find the buying point. Back then, when TSMC dropped to 380 or below 400 in 2024 or 2025, it was really simple. You just used the EPS from that year. EPS was $31, $36, or $37. In 2024 or 2025, EPS was $31, $36, or $37. With $37 EPS, if you multiplied by a PE of 15, what did you get? Around 380. So $37 times a PE of 15 is about 380, staying under 400. That was a great undervaluation, a perfect buying opportunity. If you bought below 400, you'd be making a killing now. Using the same method, during a crash, just do a quick calculation to find the bargain point. Honestly, it's pretty obvious. Hello to all the retail investors. Good evening, everyone. So How asked, ExxonMobil is down 5% with a position size of 6.5. Chevron is down 1.5, also at 6.6. Should I reduce my holdings today? Well, if today's oil prices and oil-related companies, energy companies, and related stocks are all dropping quite a bit, including energy concept stocks, it's mainly because of some news about shutdowns coming out. If you've bought too much, if your position is too large, when you run into resistance, you should reduce your holdings. It's really that simple. Everyone has different expectations for how much loss they can tolerate. Some people can't handle a 5% drop, while others might say, I have enough capital, I can wait until it drops 20% before reducing my position. Is that okay? Sure, it all depends on the individual. It's all based on the individual. Once you reach your personally set stop loss or take profit point, you need to take action. It's not like I'm here telling you, hey, you have to stop out at 10% or 5%. No, that's not it. Even if I say stop out at 5% or 10%, will you actually do it? You won't, right? Because it's your money, it's your account. Everyone has a different tolerance for risk and financial responsibility, so you need to set your own limits. You have to set them yourself, regardless of whether you're using leverage, how much leverage you're using, or whether you're buying options or whatever. It doesn't matter. You set your own stop loss. You decide what level of loss you can tolerate. 5%, 10%, 20%, even 200%, whatever. If it hits your stop loss price, you just cut your position. You just close it out. Don't start thinking, oh, the market is bullish one moment and bearish the next. Should I delay closing my position? Should I do this or that? No, sometimes we just have to operate mechanically. Only by operating mechanically can you stay relatively safe on your investment journey. If you bring too much human emotion and too many personal needs into it, honestly, it's the same for everyone. No matter whose opinion you ask, whether it's Teacher Jang, some other teacher, or any financial media outlet, it's all the same. Even after you ask, you still won't take action, right? You ask, but you still don't act. Then there's no need to ask why, because deep down you already have your own standard. That standard in your heart is what determines whether you want to increase or decrease your position. Take Ming Bao's point, for example. It just means that once you make a move, you have to strictly follow through. Some people set their rules at 5% or 10%, while others keep it simple and just follow technical indicators. When the first indicator shows a golden cross, they buy. When it shows a death cross, they sell. But when the golden cross actually appears, don't start scaring yourself like, teacher, the golden cross is here, but then Trump said something about Iran, and what's his son's name? Mu something, G something, Toss something, Boss something. He said something else, so what should I do? Should I not buy? Because when the golden cross happens, I'm too scared to buy. Sell at the death cross. But you might ask, if the economy is booming and Taiwan's manufacturing and exports are fantastic, should I still sell when a death cross appears? Don't make things so complicated. Whatever indicator you use to buy, just use that same indicator to sell. If you buy based on a certain signal, then sell based on that same signal. Whatever standard you set for buying, use that same standard for selling. Don't leave yourself too much room for second guessing. Otherwise, if you leave too much room for imagination, trading will be really, really tough for you. It'll be exhausting. Remember, it'll be extremely tiring, okay? All right, next up. Hey, Shwetayu, good evening. Also, about Novo Nordisk, let's take a quick look at the news. I think it's pretty interesting. Novo Nordisk, a few days ago, was involved in a lawsuit with Hims, that's Hims and Hers, the healthcare company. So what does it mean to file a lawsuit? Well, this company Hims had previously made generic drugs, specifically generics of Novo Nordisk's weight loss medication. Novo Nordisk's weight loss drugs, like Ozempic and others, have been selling really well. But since Hims started making generics, they took away some of Novo Nordisk's market share. They even advertised that their generic drug only costs $49. That price is extremely, extremely low. So Novo Nordisk sued them. They sued because Hims was taking away their business. But today, it was announced that Novo Nordisk and Hims have reconciled and are going to work together. So now, what's happening with Hims? They're actually going to be able to offer these products on their platform for real. The original, authentic Novo Nordisk weight loss drugs will now be available, and Hims has also promised to stop promoting the generic versions, so the two companies have basically made peace. Now you might ask, is this reconciliation more beneficial for Novo Nordisk, or is it actually a bigger win for Hims? I think it's actually more of a positive for Hims because they've reached a settlement. In the future, on the Hims platform, they can sell these legitimate, big brand medications, which will definitely help their revenue and profits. As for Novo Nordisk, at most, Hims is just another competitor or a medical platform that might engage in price competition. With one less potential threat, it won't have much of an impact on Novo Nordisk's revenue or profits. But does this really help Novo Nordisk a lot? Not really. I think the one who benefits the most is Hims. That's why Hims stock surged yesterday, while Novo Nordisk's only went up a little. That's basically it. But looking at the bigger picture in the long run, honestly, Novo Nordisk still can't really compete with Eli Lilly. So what about Novo Nordisk's stock price? Actually, whether or not there's a war in the Middle East, its stock price has been dropping since June 2024, falling from $140 all the way down to $40 now. Since 2024, it's dropped for 2 years from $140 to $40, a 70% loss. This is unrelated to the war. Looking at Novo Nordisk's weekly K-line, here's the red 20-week moving average. The 20-week moving average is still trending downward, and the 50-week moving average, which is the annual line, is also heading down. So from a fundamentals perspective, even though it's competing with Eli Lilly right now, I don't think the competition can really take it down. But technically, it's still relatively weak. So even though there's this bit of good news that Novo Nordisk and its competitor Heinz have kind of patched things up and are now cooperating in some way, I don't think it helps much. Right now, it's still relatively weak. So let's just take a quick look at this for now. That's right about Jepuli. Just like I said, if the reason you bought in is gone, then you should sell. It's really that simple. If the reason you bought in disappears, just sell it. Don't get caught up in self-delusion, thinking, teacher, I don't want to sell. I can't bear to sell. Even if it keeps dropping, I'll just hold on and not sell. If that's the case, then isn't it strange? The reason you bought in at first is already gone, but you still don't want to sell. This is really a test of human nature. Honestly, I think the biggest issue in the stock market is the test of human nature. Actually, just think about it. It's just like being in a relationship. When you first started dating this person, your boyfriend, girlfriend, the wife or husband you married, it's all the same. You got together with them because you saw their good qualities. So because of those strengths, because you saw what was good about them, you decided to marry them or be together to form a partnership. All right, so when your partner no longer has those good qualities, or even starts showing a lot of flaws, when they're no longer the person who used to love you, are you still supposed to cling to them no matter what? What if now there's domestic violence, or they're having an affair, or they just don't love you anymore? So are you really supposed to keep dating or staying with them? Wouldn't that be strange? It's the same with stocks. Maybe you liked a particular stock at first because of its fundamentals, revenue, industry trends, or a bunch of other reasons, so you bought it. Maybe the fundamentals and technicals were all great, so you bought in. But as time goes on, and because of outside factors, those reasons start to disappear or even reverse. When some really negative news comes out, shouldn't you just sell, right? So that's actually the reasonable thing to do, but most people just aren't willing to sell. They won't cut their losses, won't sell, won't break up. So when you can't break up, that's when a lot of tragedies happen. Just a lot of tragedies. That's basically how it is. Okay, moving on to the US stock market pre-market companies like Forte Pharmaceuticals. In pre-market trading, it went up 5.26%. I heard that one of their kidney disease drugs is performing well and selling well, so Forte Pharmaceuticals rose 5% before the market opened. Boston Electric and Corning also went up 3% pre-market. Coinbase and this other holding company both rose about 2.8% pre-market. HPE, as well as Oracle and Robinhood, including others like them. These specific companies, SanDisk, WDC, Applied Materials, and Micron, all went up about 1 to 2% in pre-market trading. So today, looking at the futures market, US stocks are up about 0.5% pre-market, and the upward momentum is still there for now. But how long this momentum can last really depends on what Trump is going to say. So the rebound at the end of yesterday's session and the rise in futures today, I think it's better to wait and see for now and not get too aggressive. Falling stocks include Occidental, Conoco, Qualcomm, ConocoPhillips, Chevron, and ExxonMobil, all down 1 to 2% pre-market. This is due to Trump's tough rhetoric suggesting, is US-Iran tension easing? That explains the mixed pre-market moves. The Dow dropped near its 200-day MA, narrowing slightly. It closed up 0.5% after a late rebound yesterday, so keep an eye on it. Monthly and quarterly averages are pausing as it tests annual average support. If the annual moving average holds, a bear market is unlikely. The Philadelphia Semiconductor Index dropped 3.93% 2 days ago, but surged back by the same amount yesterday. As for the upward trend line, it was lost, then regained. We'll have to watch if it can stay above that line. If it can't hold above that level, then there's a chance a short-term top could form, so just pay a little attention to this potential short-term top. If that happens, the consolidation period will intensify. But if it manages to get back above this blue trend line, then things will look better. It depends on what Trump says next, so wait for stability. The Magnificent Seven are doing okay, holding above the 200-day MA and this trend line. Yesterday, they rose 1.08%. See this as a short-term correction. I still think we need them to boost market confidence. This includes Taiwan's supply chain, closely tied to the Magnificent Seven as well. Keep these indexes and stocks in mind. When trimming or planning your portfolio, the principle is the same. Managing your position sizing is crucial. Please pay attention to this. In these two sessions, we can all see, not just by watching my show, but by looking at things over half a year or a year, everyone has been in this chat room for a year or two, constantly interacting. What does that mean? It means that everyone is still surviving in the stock market. The longer you survive, the more likely it is that you're making more and more money. So, slow and steady wins the race. First, manage your risks well. Whether you make a lot or a little in the future, I think everyone has a chance. Everyone has a chance. All right, that's all the group-related content I have for you before the US stock market opens, bringing you the latest updates first. When class is over, remember to like, subscribe, and share for us. Finally, I wish you all smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.